Welcome to this week's Cattle Call. I'm Susan Littlefield on the Rural Radio Network. You folks blew up with questions off of last week and comments that were coming as we talked about what was happening with heifer retention. Well, we're going to continue that a little bit, in part because of a question that came in about where the heifer retention might be taking place. But we're going to take a look at what's going on with formulated cattle, that is. We'll look at 4 consecutive days of green on the screen for this cattle market as we're doing this program on a Wednesday. Lots of things happening. A couple other listener and viewer questions we'll be passing along as well on today's episode. As you can see, Brad Kooima joins me with Kooima and Varilek out of Sioux Center, Iowa. And so let's start out the fact that this is day number 4, that we've had positive numbers on the futures.
How about that, Susan? Thanks for having me on again. I always enjoy it. I kind of a little put off by these people that want to ask questions. You know, maybe they should find somebody that knows what they're talking about, right?
I think they're looking at you.
Yeah, well, it's very nice of you to say. The market has lacked some follow through the last while. So to bring up, and not just the 4 up days in a row, but the way the days went. This week, the pattern has been, we start okay, and then we sell off, and 50, 60, 70 lower, and then we start to crawl back. And all of a sudden you go like, hey, we're back to green for the day again at 12:15, right? It's a shift in the pattern that we'd seen for several weeks where the market seemed like it would try to rally, and then by the time the end of the day, you would, the selling would dry up and you'd run out. So good action. I thought good action in the feeder cattle too, for that matter, particularly on a couple of days here lately where we've had an up in the corn like yesterday, and we were still higher on the feeder cattle futures. So I always like to see the feeder cattle show some leadership. They seem to be important to the overall trend of the market, and cash feeder cattle certainly are stronger as well. So yeah, a fun little run here. And some of the back months actually may taking a run at contract highs and stuff like that. We're getting some of those back month markets at a pretty nice level now.
So first question coming from a viewer is Ed, and he's wanting to know, where are these retention heifers coming from? Are you seeing more in the north to the west, any in the south, or is it just centrally located in the Midwest?
It's a great question. And it is regional. And it's regional. That's largely based on whether you've had any moisture or not. I was able to be at a meeting in Lincoln a week ago, Tuesday, with some cattle folks all the way down the south. And I talked to one fellow from Delhart that's had less than 9 inches, I forget, less than 11 inches of rain or something like that in the last 2 years. That's dry. Kansas guy that had 4.5 inches of rain for the calendar year last year. It's pretty difficult to get fired up about heifer retention when you're looking at those kind of conditions. Now, conversely, you get north of I-80. Sandhills in Nebraska are tough though too. I better not generalize it quite that way, but if you get like the Dakotas, Montana, Colorado, Wyoming, and chatting with some of the folks that I've gotten to know over the years, where I bought feeder cattle from them, or just connections that you develop, it started. The Cattle on Feed report last week, also for the first time in many months, showed a 1% drop in the percentage of heifers on feed. So otherwise, for the year last year, heifers were 6.7% over the year prior. 6.7% more heifers for the year prior. I mean, it's like we took every single heifer and fed it, which we didn't, but a lot of them because of the drought conditions. So yes, to answer that, your listener's question, it is regional. It isn't quite the widespread 213 deal where it started to rain and it kind of rained everywhere. Now, they did get some moisture across the south this week and some tough weather, even some tornadoes and stuff like that. So let's keep an eye on whether that weather pattern starts to get wetter in the Panhandle and Kansas and stuff like that. And maybe we can also put them in the club that's going to try to save a few heifers here this year.
And since we're on viewer questions, this one came off of our YouTube channel. I'm going to turn to read it exactly. James says, I raise cattle, but the question that I ask is, can a tapped out U.S. consumer afford to eat beef with burger around $5 a pound and a dozen eggs over $7 and then the price of gas? What are your thoughts?
James asked a good question and tough question, a question that is not nearly as easy for me to answer, Susan, as that last one was. Right. I mean, that's math and that's, analytics. This is one thing that fascinates me a little bit about cattle analysis in general. When you're talking about demand, remember that we don't throw any away. We've got a perishable commodity. To me, And when you're talking about beef demand, you're talking about how much are you producing and how high can you sell it as a measurement of demand. Okay, so I'm sensitive to the tighter budgets, paying more for gas. Yeah, okay, but I'm also sensitive to where the rubber meets the road. Where what I'm trying to say is that we've had last year beef production was huge, and we sold that stuff pretty darn high. Okay. Some of that slack is being picked up by not just domestic demand, but as well as international demand. I I do push back a little bit on this idea that it's just too high. It's just too high. Yesterday I didn't have enough time when you told me what this question was going to be to pull the data from yesterday. But every Tuesday we get this retail report of what the average price of all these cuts are. Hamburger is actually cheaper than last year. I mean, you get a mindset that, this stuff's high. Well, actually the average price was cheaper than last year according to the report. Now, ribeyes about $1 a pound higher than it was a year ago. So it's not straight across the board. One smart aleck comment, and then I'll try to move on. The packer didn't care about the price of beef when we were in COVID, and they ran the boxes to $465, and we were getting a whopping 95 cents for our fat cattle. So for Steve's question, it's a concern. I don't think we're anywhere near that yet. I think that you got a consumer that has come to really like beef. We've got a great product. Right or wrong, there's probably more separation in the middle class, upper middle class towards. And I'm not. It's just what it is, So there seems to be that group that says, I want to have a $10 ribeye once in a while, and I don't think we're there yet. It's something to be concerned of, but I guess I'm hoping that usually those things go too far, too fast, but I don't think we're there yet, Susan.
All right. Sounds good. So you and I were talking before we started this program about what's going on in the cash market. And you made the comment to me that we need to light this cash market on fire. How are we going to do it?
It's hard to do when people are so easy sellers. The people in the north, across the north, are struggling here with pen conditions and poor performance, cattle that have stalled out, cattle that aren't growing and not performing, and they just want them gone. They just want them gone, So when you're motivated like that to sell cattle, you're not much of a negotiator. I was hoping maybe this week, maybe things would be a little better. I don't think we'll be lower this week. I think steady, firm. South, the numbers are very, very tight, particularly Texas. They might even be higher by the time we get to Friday. So we're trying, but, we don't have that. It's not like the fuse is lit. It doesn't feel like to me here. We're going to have to chop wood for another 3 weeks, I'm afraid, to get through some of these stunted cattle yet.
And the mentality that goes along with this has got to be a struggle as well.
Mike, customers I've had for a long, long time, I love them, but, they are despondent. I mean, we're fighting through horrible weather and we're not getting any reward. And in most years, if the cost of gain spirals and the rate of gain drops, you get paid for it. And now we're sitting here basically lower than what we were a month ago for cash cattle. And it's a little disgusting, right? Number of formula cattle, you hit that a little bit early, and I know we're running out of time, but I think that's also part of the week on the weaker cash trade. I'm a firm believer that the more cash cattle you negotiate, the better chance that the prices go higher. And as you negotiate less, there's less competition, there's less right? Well, Nebraska, particularly the last 2-3 weeks. Yeah, sorry, I love you guys, but they've had a huge spike in the number of formula cattle traded. So I think that's also part of the story why the cash has been so hard to come by, because they just haven't had to buy very many.
And we cannot leave. You'll be gone next week at NCBA, so somebody else in your office is going to be filling in. But before we wrap this up, I need to get your thoughts on what we could see in next Tuesday's report.
I can't wait. I suppose the market will shrug its shoulders and say, well, okay, whatever. To me, those inventory reports are very fascinating. They set the mold for what you have. Last time I checked, one cow has a calf, right? And I want to see just how far the USDA is going to shrink this cow herd after the kind of cow kill we've had for the last 2.5-3 years. It ought to be epic. Also curious what their view is going to be on that, what we talked about earlier on the heifer retention category. We'll see if they tip their cards as to what they think that's going to look like. So always a very fascinating report. That'll be out Tuesday at 2:00. And I'll be looking at it, I'm sure, down there in New Orleans, of all places, for a cattlemen's convention, but that's where we'll be next week.
All right. Well, I look forward to catching up with you in 2 weeks. And thanks I think it'll be Joe filling in for you next week. Yep. Thanks as well to the guys that sent in some questions and comments for Brad this week. And as we always remind folks, commodity futures and options involve a substantial risk of loss not suitable to all investors. That's this week's Cattle Call. on the Rural Radio Network.